Are you a high-earning Locum Tenens professional making $500,000 or more in 1099 income? In this video, we'll dive into a tax planning strategy that could save you between $40,000 to $50,000 in taxes each and every year. Welcome to the Locum CPA podcast, where we talk about the business of being a Locum Tenens medical professional. My name is Stephen Lee. I'm a certified public accountant based out of Chicago, Illinois. We'll look at how you can leverage an S corporation, set up a reasonable compensation plan, maximize retirement contributions, and take advantage of an accountable plan as well as a health savings account. This is a plan that we do for many of our clients, so you want to stick around to see exactly step by step how we set this up, what we set up, as well as what it can save you in taxes each and every year. First, let's talk about setting up an S corporation. As a 1099 contractor, you're considered self-employed, which means you're responsible for paying both the employer and employee portions of Social Security and Medicare taxes. This is where an S corporation comes in. By forming an S corporation, you can pay yourself a reasonable salary and distribute the remaining profits as a distribution. What is the benefit of an S corporation? You only pay payroll taxes on the salary portion, not the distributions, which can significantly reduce your tax liability. For example, let's say you're making $500,000 a year in Locum 1099 income. You might set a reasonable compensation of $276,000 as a salary. Remember, reasonable compensation is something that needs to be done. A technical study needs to be done to make sure you have the proper support to defend or support whatever reasonable compensation that you have. Many times I see clients come in from previous CPAs or doing it themselves with a reasonable compensation that has no evidential support. So you want to make sure you check out my previous video on reasonable compensation. I'll leave a link, a video card in this video above, so you can click in to see how to calculate reasonable compensation. Okay, going back to this, you'll pay payroll taxes on the amount that you can classify as a reasonable compensation of $276,000 in our example, while the remaining $224,000 can be taken as a distribution, avoiding any additional Medicare tax, which is close to 3%. Okay, so really, the S Corp strategy comes into play where you only pay payroll taxes, aka self-employment taxes for those of you who are LLCs, on the portion that you consider a reasonable compensation, while the remaining distribution, you avoid any type of payroll tax or self-employment taxes. So that's where the S corporation comes into play. So for example, going back to this, you avoid paying Medicare tax on the remaining $224,000, okay, of your 1099 locums income. So remember, the Medicare tax is close to 3% here. So what is the tax savings in just being an S corp versus a single member LLC? Therefore, for this example, you'll save close to $7,500 on additional Medicare taxes by being an S corporation. Okay, that's just one piece of the puzzle. And as a business owner, you also have the ability to contribute to various types of retirement plans like a 401k or a SEP IRA. Once again, refer to one of my previous videos on which retirement plans you can use as a locum professional. Okay, I'll leave a link in the video on the screen. For this example, let's go with a SEP IRA. Remember, with the SEP IRA, you can contribute up to 25% of your compensation, or a maximum of $69,000 for the 2024 tax year. Remember, that limitation of that max continues to go up. The lower of the two. So remember, it's either 25% of your reasonable compensation in this example, or $69,000. In our example, if we've taken a reasonable compensation of $276,000, you could potentially contribute up to $69,000 to the SEP IRA and deferring the tax on that income until you retire. This $69,000 contribution, assuming that you have an average tax rate of 35%, let's say it's 30% for federal, 5% for state income taxes, The SEP IRA contribution of $69,000 would save you close to $24,000 per year in taxes. So by just putting away $69,000, you'll save up to $24,000 in taxes. The way to really think about this is the IRS or the government is really encouraging you and helping you save for your retirement up to $24,000 per year. So you definitely want to take advantage of that. So when it comes to how much to contribute and save on taxes, for my clients and I, we like to plan this at the beginning of each and every year. So we go into each year with a strategy and adjust when necessary. So make sure you talk to your CPA about the right amount of reasonable compensation and retirement contributions to maximize your tax savings each and every year. And if you're a locum professional, you don't want to miss my top tips on starting and operating your locum practice. I'll pin a link to those tips in the comment section below. Next, let's talk about an accountable plan. An accountable plan allows your S corporation to reimburse you for business-related expenses like travel, meals, continuing education, or even a home office without including those reimbursements in your taxable income. For instance, if you spend $10,000 annually on travel and work-related costs, an accountable plan allows your business to reimburse you tax-free, lowering your taxable income. Using the same average tax rate of 35%, the accountable plan deduction of $10,000 would save you close to $3,500 or $3,500 each year in taxes. For those of you locum professionals who also have a separate W-2 position, and this is very common, along with your locum contracts, or you have a spouse in your household who is also working a W-2 job, I highly recommend you to also max out each of those employer-sponsored retirement accounts, like the 401k or the 403b. Remember, the max for each in 2024 is $23,000. Therefore, each W-2 position where you max out the employer-sponsored retirement account, you can save an additional $8,000 and possibly a total of $16,000 when you combine both spouses' W-2 employer-sponsored retirement plans. Lastly, don't forget about a health savings account, also known as an HSA. As a self-employed physician, if you have a high deductible health plan, you can contribute up to $4,150 if you're single, or $8,300 if you're covering a family. HSAs offer a triple tax benefit. First, the contributions are tax deductible. Second, the account grows tax-free. And third, the withdrawals for qualified medical expenses are tax-free as well. Using the same average tax rate of 35%, the HSA contribution of $8,300 would save you close to $3,000 in taxes each and every year. By combining all of these strategies, forming an S corporation, paying yourself a reasonable salary, maximizing your SEP IRA contributions, using an accountable plan, contributing to either your separate W-2 income or your spouse's W-2 employer-sponsored retirement accounts, and lastly, contributing to an HSA, you can effectively reduce your taxable income each and every year and keep more of the hard-earned money. Remember, in this example, using all of the strategies I just outlined for you, you can save between $40,000 to $50,000 each and every year in taxes while saving for your retirement and future healthcare costs. And if you're a locum tenens physician looking to optimize your tax strategy, please do not hesitate to reach out to me. I'll leave my email in the description section below. Also remember, it's not about how much you make, it's about how much you keep. Until next time, bye.